Good afternoon, traders. I'm Michael Sabo, Senior Commodities Broker here with RJO Futures on Monday, October 7th with some commentary here in the energy market. So let's get started. Crude prices touch weaker here right now. We're off about 64 cents. November oil is trading around 103.20. That's after hitting lows earlier this morning down around 101.86. So market was off almost $2 here. We're seeing some weakness in Brent, although not as much. We're trading around 109.35, only off 11 cents. Nat gas kind of bucking the trend. We're a little bit firmer there. The complex is a bit weaker. So, what do we have really going on here? Well, as we know, we still got this shutdown going on in the government there. So that's kind of weighing on the market a little bit as traders are becoming a little concerned. So we are seeing a little bit of risk-off type attitude, although, again, oil has come back off its lows. But we're seeing some weakness there in the equities market and some of the other commodities. Moving on here, we've seen here, you've got Tropical Storm Karen down here in the Gulf. And that's kind of passed through. So it did kind of shut in some of the platforms down there. They're coming back online. Something bigger, though, than that, I think, is what we've got going on here in China. And we've mentioned this before. We're really starting to see a slowdown there. Most of East Asia appears to be slowing down. The IMF recently revising their growth outlook. So again, suggesting that things, I've mentioned this in so many posts here, that we are seeing things just settle back here a little bit. With that comes the expectation for lower demand possibly for crude oil. Europe, we know that they're still shaky over there. They have improved a little bit, but things are still kind of shaky over there. The technical picture right now, short-term techs were a bit oversold earlier. They're kind of coming back here into the neutral area. So, I think we still want to watch that here. Still a little bit of mixed signals there. But I think the biggest thing right now affecting oil prices, and this is something I've mentioned in so many posts, is take a look at those stockpiles. Last week we saw a build of about 5.4 million barrels, putting our current stock level at around 363.7 million barrels. That's just 1 million barrels shy of our all-time high for this time of year, which was back in 2012, where we were around 364.7 million barrels. So as you can see, when you take a look at those stockpiles, we're certainly running on the higher side right now, coupling with the slowdown that we're looking at, the possibility for a little bit less demand. That's what's really been helping, I think, keep these prices under pressure here right now. So again, still targeting down around that $100 a barrel oil. Got some ideas, some trading strategies here that we start taking a look at here, some option ratio spreads. If you're interested, give me a call, shoot me an email. I'm more than happy to explain to you here the different strike prices and exactly what it is that we're looking for. And of course, keep in mind that futures trading does involve a substantial amount of risk. It may not be suitable for all traders. Good luck and good trading.